we should spend some time focusing on the importance of this channel, this conduit for the transit of oil and gas in the Middle East to all parts of the world. Explain the importance of it, the gravity of this situation where we see from Maersk and others really a standstill when it comes to the transit of these shipments.
Well, I think it's prudent and important to stay away from a war zone once it initially starts. But the potential for Iran to really discombobulate traffic in the Strait of Hormuz, I think, is quite low, particularly because I doubt the U.S. military, who have war-gained this event for almost 4 decades, would not have that very well covered. And again, the U.S. has a history in 1988 of wiping out the Iranian army in just a few hours. So I think it's prudent to stay away and now as it starts. But my sense is these things typically start really fast. I think by the time we see the Monday morning, markets open Monday morning, we're probably going to see the word maybe more defenseless next to this country of Iran. We're seeing peripheral attacks coming out. But I'm pretty sure that this is pretty well covered, and this is just in early stages. Something has to go terribly wrong, where I think markets already had a pretty good premium priced in for this, particularly in crude oil and gold. And I think risks are we might see a little bit more relief and head lower as we head into New York's Monday open.
Mike, we talked about this a little bit yesterday, but I want to get your take. What is the bigger impact? The actual physical blockades, the routes being stopped, the bombs and rockets dropping on possible oil installations, or the psychological impact on the markets, yet another conflict breaking out and these companies having to pivot or at least protect their assets in a way that seems smart and responsible given global events?
Well, I think the psychology is the important part. So the market has bid up for a pretty significant premium in price for Brent, maybe around $10 a barrel, up to $72 a barrel on the year. So it's already priced for that premium, but potential supply disruption. So we might have some issues in the strait, maybe some tankers, but is there going to be a definable disruption in supply from that part of the world? Iran exports up to 2 million barrels to the day. Put that in context, the U.S. is approaching 4 million barrels a day in crude oil and net liquid exports. So I think that's the key thing. I think it's unlikely. We did see an example of Saudi facilities getting hit in 2019, and I think it was September, and that lasted for a little while. You got a little bounce, you went back. The difference this year, now that was really more of a different market. We're in a severe bear market. We've already bounced in price. So I got to see some supply disruptions. Otherwise, I think risks are. Another key thing I want to mention is managed money. Hedge funds came into this weekend a little bit long, so they might be at risk of hitting some stops.
Mike, we got about a minute left, and you've talked about a discombobulation, the way that the markets have to digest all of this. In that minute we have left, walk us through how you're going to approach the open tomorrow, the Monday open.
Yeah, I think we're going to see, we already have good indications of relief in Bitcoin. It went down and right back up. We've seen the gold market trade with tokens up maybe the $5,400 an ounce. The way I look at it is unless there's some kind of major setback for U.S. and Israel, which I doubt, we should expect the premium in crude oil to be lower, maybe even natural gas to reduce some of that premium, and maybe even in gold to go lower. But I think you're going to see a bit of a relief globally that the head of this country that's been a bit of an antagonist on the global scale has been removed.